KTN News. Get the whole story.
The world is talking recovery from the impact of COVID-19. How are banks performing? Today we are in Standard Chartered Bank, Kenya, and we'll be speaking to the Finance Director and CFO, Chemutai Murgo, to help us understand exactly what are the numbers, their half-year performance, and what is the outlook for the banking sector. But right now, let's take a look at her profile, shall we?
Chemutai Murgo is a Chief Finance Officer at Standard Chartered Bank, Kenya and East Africa. She has been with the bank for over 20 years. She has a wide experience in finance, having worked previously as Head of Finance as well as Head of Business Finance. She has also held various senior positions at Deloitte & Touch, both in Kenya and the United Kingdom.
Karibu to Trading Bell.
Thank you, Noah.
All right. So,
good to be here.
Yeah, so net earnings have gone up compared to a similar period last year. I know 2020 was crazy for everyone. It's 53% up to 4.8 billion shillings. What necessitated this rise?
Our performance this half year at the profit before tax level is 33% up. It's really informed by strong performance at the top line. Our revenues, they grew by 2%. Our costs continue being well managed. We continue allocating our costs, obviously, to our transformational investments, which is the digital. Our strategic initiative, one of them is disrupting with digital. So we continue allocating our capital really well. And despite continuing the investments, our costs year on year have come down 6%. Okay. So that set us up for a strong working profit, which is really your revenues compared to your costs, which were 10% up year on year. Of course, you've mentioned that 2020 was a challenging environment for everybody across the world. Of course, we were grappling with the pandemic, deep lockdowns last year. Of course, throughout the year, we've somehow managed to have a rhythm around managing the pandemic, and the lockdowns are not as deep as they were before. And therefore, from all the projections we see, the GDP is expected to grow by more than 5% compared to an estimate of 0.6%. So obviously, you can see that the economy is beginning to recover, of course, albeit at an even recovery, because different sectors were affected differently. If you look at your tourism, you look at your hospitality, those bore the significant brunt, of course. But the economy is beginning to recover. And then, of course, from our side, when you looked last year, we stepped in as an industry to support our customers. I think in total you saw that the industry supported clients restructure 54% of the total loans. And so last year we really managed that process and supporting our customers, and we really are behind that now. We see, for example, for us, our consumer clients that had stepped in to take those opportunities, 97% are now being managed under a BAU basis, which means it's really worked well. Yeah. So really, when you look then at the loan impairment, it is influenced largely by the outlook that we see in the economy, and therefore you saw in our results that has come down 61%, and that really has really come through to our bottom line.
Definitely, and that is painting, a very positive picture and recovery story, since the country right now is talking about post-COVID recovery. And banks are central to it because you understand majority of businesses, enterprise was hit heavily. And part of recovery is supply of credit into the market. Based on your half-year performance, especially your loan book, taking a look at it, how has it performed compared to similar period last year?
When I look at it to the most recent position, which was December, our loans have grown 7%. So definitely we are beginning to see demand for credit coming through from our customers. Of course, customers also last year were, they would have deferred some, let's say, investment needs as they also grappled with the pandemic. So we are beginning to see that demand coming through, and we are cautiously optimistic that in the second half that trajectory will continue.
No, that is positive news, actually. Lack of credit has been one of the biggest challenges when it comes to businesses. And the issue of assessing risk, it's one of the areas that, it was being looked at by financial institutions. How do we assess risk, especially for small businesses who are majority in our economy? Has there been progress? Is there a change in terms of risk assessment moving forward?
I think really risk assessment has to change and is continuing to evolve. And even when you look at the banking charter that was issued by the central bank, implemented by the banks, we really support those key pillars. So risk assessment depends on really the individuals. It depends on the company, and really if you have a stronger risk environment yourself, you've put in strong structures, etc., then of course that feeds into your risk assessment. So there's a lot of things that go into that risk assessment, and then that is then showed to each individual customer.
All right.
Yeah.
That is evolving. It is an evolution. So we're just chatting here. You told we're talking about how COVID kind of surprised everyone, even in the banking sector. Just looking at your workforce, close to 70% working from home, and does this reflect also on the cost that you've cut in terms of the staff element of it?
What I would say is before 2020, of course, as an organization, we had embarked on a transformational journey. Really, one of our key pillars of strategy was to transform with digital. So we'd really invested into these capabilities. And as you know, we launched our mobile app digital bank in 2019. So we were on this journey of transforming. So really, when the pandemic hit, we were able to really work from home. As you said, staff can work safely from home. 70% of our staff, on average, have been working from home. And our customers really pivoted to the digital bank. In our digital bank, for example, we had taken some of the journeys outside the branches, for example. I'm sure you will recall you would go to the branch to change your password, maybe to request for open an account. We took 70 of these journeys outside the branch and we put them into our digital bank. And today, just short of 2 years, over 60% of all those journeys are actually fulfilled from the digital. So when the pandemic hit, our customers really appreciated and pivoted, and really we've seen tremendous acceleration. Today, for example, 98% of our total bank accounts we open through the digital. 66% of our sales that we make for our investments role fulfilled from the digital. When you look at our corporate business, over 90% of our customers use the digital platform. So really, we had done that investment, and we continue doing that investment to ensure that our customers are able to access their services seamlessly.
Very critical. Digital is the core of this new world that you're living in. Everything is digitized. Still banking. Now you can change password from your phone. That is quite convenient. And also the security aspect of it. I understand you say you've invested heavily in digital. And, you know, we're chatting earlier on the Dalberg report, you know, of, our digital economy. And one of the biggest concerns for majority of Kenyans is security. Even as banking goes digital, the security element of it, how do you process, how do you go about it?
You're very right. I think banking, you know, has had a long history of an industry that has dealt with, you know, private information of customers. So of course we've ensured that all our customer journeys are really supported by infrastructure that ensures there is the customer data is protected. So yes, you're right. It is true that it has to be a concern. Is my data right? And you know, there are all these laws now also that has come to ensure that customer data is also protected. So yes, we've invested heavily in that. Of course, the environment is evolving, and you have to keep up with what is happening. But beyond that, there has to be strong education of the customers, and so you'll have seen we've also put in a lot of education so that we also ensure the customers protect themselves.